Yo, yo, yo. Welcome back, guys, to the charts. All right, man, a lot to cover on this video. A lot of things happened last week. Quad witching, major expiration week for options. And yeah, what happened last week changes a lot of what the projection for AMC is on the macro. Now, it doesn't change the targets. It just changes it changes basically this time structure that we have set up. How slow and how fast certain sections of the algorithm are to play out now. All right, guys. You know the drill. Hit that like button, subscribe, and let's get it. Let's get it. All right. So yesterday, Friday, AMC closed at a around 455. Man, it got really close to that 444 range that we talked about on the previous quad witching date. So the previous quad witching date on AMC was March, I believe it was March 15th, right? And over here, AMC was trading at 444 when it closed. All right, so we did close slightly higher than that, which is a good sign. And I'm going to talk about what this means for the cycle, what this means moving forward. So for those that have been on this journey here covering AMC, we did start off with the correlation between AMC and Carvana with the quad witching dates. The quad witching dates are very important in just how price behaves. Heavy volatility inside from point A to point B. In between, right? In between one quad witching date to the next one. So we're going to pull that up, man. We're going to talk about Carvana here. The whole deal. All right, so Carvana. Here's the quad. Here's the standards. And here are the phases, right? All right, for AMC, the quad trend lines here have changed slightly, a little bit, and I'm going to talk about why this makes a little bit more sense here moving forward. All right, here are the phases as well. So just to start things off here, a few things that we can kind of just brush off that are still positive for AMC on the macro chart, and that is that, well, in accumulation, we do experience double bottoms frequently. But what you want to see when you're exiting accumulation, you want to see a macro higher low established, meaning that in this support trend line here, we do want to see that happen. We don't want to come back. Pretty much this means we don't want to come back to that 250 range. Because if we do that, then the chances are that the accumulation phase would actually last longer, and AMC would be trading sideways between a range for quite some time before going into reaccumulation. We see this happen with the majority of stocks in the market. If we're going to be if we're going to go up on the macro on the long term, then we need to see that happen for AMC, which right now we're still holding, right? So what happened here? Why is AMC still trading in this range? We talked about the $8 target, which we got very, very close to. It was between $8 and $12. We got very close to 8. We got shut down, and we created that little projector, right? On the last video, I did talk about this spring setup that's coming. I'll touch base on that a little bit here, but I want to talk about this quad projection here on AMC. So from the last quad witching date in March to this one here in June, pretty much AMC and the market makers were successful in pumping the stock and bringing it down to pretty much the same range. This is the hedging that I've been talking about here. So what happened last with Carvana here, right? If we take a look at prior to the pump, which again, if you have not seen this video, guys, AMC and Carvana pretty much pumped the same, right? And we've been talking about this for a little while now, but AMC went up 450%. Carvana went up about the same, right? 400, almost 500%. Okay? They both pretty much pumped this. They dumped the same way. If we take a look at the ratio between the two, Carvana pumping to these levels, coming back down to the $6 range is the same thing as AMC going up to the $14 range and then coming down to $4, which is what we have so far. Now, in this range, the one thing we don't see is the last quad witching that happened with Carvana. So this trend line here that you're looking at down below, we're going to highlight this one, make it blue as well. This is what you're not seeing in the chart up here, right? Maybe the standard option dates are a little confusing. So this is what we're not seeing in the chart, and it's possible that the cycle here, right, because we're taking a look at a year-long cycle for Carvana here. This is 4 quad witching dates, and here are the trend lines, or the ending price is, where it closes. But we taking a look at this, now it's starting to make a little bit of sense, right? We're in accumulation still. It's possible that this phase here, it's longer, right? We have more dates to go before entering reaccumulation, right? Because right before reaccumulation, macro reaccumulation, we're going to be creating that higher low. We're going to be ready to move on up. So AMC's trading sideways. Okay, we ended pretty much right around the same range that Carvana did as well. It went down to $7 from the highs, and then it traded sideways for a little bit. And this is where we get to this algorithm, right? Speeding things up or slowing things down. Because the two don't have to track the same in time, right? If we spot we talked about this before, but how quickly did AMC run up compared to, Carvana, right? Carvana, it took almost a month for it to reach the 500% range. For AMC, it took a few days. And this is why certain sections in the cycle are sped up, all right? Now, with this accumulation phase that we're in, yeah, it's possible that a lot of what's going on in here, the same range, guys, $4 to $7, all right? It's the same thing with Carvana down here, from $6 to about $12. It's just trading sideways for a little bit of time. Now, this is where we start to look at other patterns in the market and fractals, and we also, we look at where these option expiration dates are, and we also track the AMC cycle, which is 62 days long, all right? This cycle has a lot of correlation with that 13-day window we talked about. I'll pull it up here in a second. But, once we figure out where we are, then it's a lot easier to kind of narrow things down a little bit and see where we might end up in the next, in the coming months. All right, so now that we kind of talked about the Carvana sequence here, let's go ahead and talk about the micro. What's AMC, what we can expect next on AMC, right? Because what did we do, guys? We already crossed, right? We crossed below the 450 range. So AMC will likely come down to $4 in that range and then spring. That is what I'm hoping for here if we do want to follow this, this macro sequence. Let's go ahead and take a look at some of the patterns that we're calling for this, because there was a few. I'm going to talk about the ones that were calling for upside earlier, and I'm going to talk about the ones that weren't, right? So here are the patterns we've been tracking one by one. All right, so obviously Carvana is one of them. And we already talked about the accumulation sequence for Carvana that takes a few months. It's possible that this right here is sped up, and once we spring here, AMC starts climbing back up to the $8 range. We could do that a lot quicker, or it could stall and take some time, right? It could trade sideways. We also had Perry. This is the one that was calling for upside a lot quicker. But we started to, stray away from this pattern pretty early on. And this is where I made the video of, 2 scenarios based on how AMC can reach that $8 range. And the second one was using Plug, right? Plug was the other accumulation pattern that was calling for the spring. This one goes, hand on here with Carvana. The two are pretty much calling for the same thing once we do hit that double bottom. So that's very important, guys, is that we do respect this $4 range. And I'll pull up the projection here, right? So this is what we have for the AMC spring. And what we talked about, this was the second projection. And you guys see that highlighted pink area, that's the spring, right? AMC has to basically double bottom on the macro and then create this fake out, this macro fake out on that trend line, which does not hit macro support, but it does fake out on, meant to say micro support. It doesn't, it will fake out on the micro, which is important because that's what these hedge funds are looking for, right? They don't want everybody getting in, especially on a very important third retest. So it's already faking out is the thing, right? It already crossed. All we need is a fake out. We need it to complete the fake out for things to be bullish here on AMI. All right, so that's what we talked about last week. Let's bring the charts back up. All right, one more thing I want to kind of touch base on here, and I think this indicator here is kind of crucial to this whole thing. All right, but it's the volume, and we're going to do this on the daily chart. So this is volume times price, guys. This is very important. Very, very, very important if you want to know pretty much this is as true as a chart gets, because with splits and any chart that has dilution, this will kind of account in for all of that. And it's a good way to compare charts in general. So this right here I'm using to also compare to some of the other stocks we've been talking about, like Carvana. Right, Carvana, when it started to pump back up, and you can use the same time frame here, 2 hours. Two-hour chart. Here we go. Okay. So when it started to pump right here, we can see the similarities between the two, right? We're not tracking the same volume levels, so those are obviously going to be different. But this is a good way to we'll see the volatility zone and then also track it in time, because a lot of what's happening in between, guys, when volume starts to dry out, you can't really see. Obviously, the structure of the pattern are going to be completely different, but here on this pump and dump, it very quickly dries. The volume very quickly dries out, and it's a lot easier to spot these smaller POIs, okay? And, yeah, I mean, we are very low in volume right now compared to the most recent pump we had. I mean, volume is pretty dry. So the more it narrows down, the higher the chance that we experience volatility, right? And that's where we get into this kind of cup setup here. That's where we enter the final accumulation stage on Carvana before everything starts to pump back up. Guys, markets are at all-time highs. I've already said this before, man, but like when markets experience all-time high levels, this is where you see these stocks pump. I mean, there is a correlation with that. All the high, small, mid-cap stocks with high volatility, they end up pumping last in this sector sequence, sector cycle sequence that we've been covering here a little bit. So all that is very important. And yeah, it's all about checking things off at the end of the day. As they come and go, we want to check things off here. And right now, AMC is still looking good, man. I mean, it's trading sideways. It's choppy, but it's still respecting everything we've been talking about. I mean, these are worst case scenarios, like short-term worst case scenarios that we've been talking about. And and so far things are looking pretty good. Yeah, man. So we'll give you guys an update here tomorrow, see what the markets end up doing. But this is going to happen very quickly. We already talked about the spring here. If we are going to fill this gap and spring back up, it's going to happen very quickly. So $4, and then next thing you know, it's trading back at that $5 range. All right? All right, guys. So that is it for today's video. Real quick, if you guys would like to check out the Plotzy indicator on the Discord, go to ko-fi.com/WeCharts. We also have Discord plays available and indicators, trading view indicators. All this stuff, guys, cycle analysis, cycle approach is what we do here on the Discord. So check it out. You guys have a great rest of your day. Man, bye-bye.
Training.